Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay guys, let's take a look again at the euro currency. Yesterday we have discussed the Japanese yen situation. That was really intriguing and interesting. We could call even exciting the price action and the patterns that now forms on the weekly time frame of the Japanese yen. That's really curious and could give us really significant potential for trading. But since we yesterday have skipped the discussion of the euro currency, let's try to understand what have changed here, and maybe we'll find some clues to watch for during the trading session. Well, in general, I could say that the most investors now expect the FOMC meeting that will happen on June 18-19, and that probably could shed some light on the potential perspectives of the quantitative easing program and what will happen in general with the interest rates in the United States and what the assessment of the current situation in the economy by the Federal Reserve. Today I have taken a look at the chart that indicates the moments where quantitative easing first, second and third have been initiated, and what has happened with the non-farm payrolls indicator and ISM manufacturing. And I would like to share with you that in fact the real significant appreciation as manufacturing index as non-farm payrolls have happened only with the quantitative easing first program. Within the quantitative easing second and third, there are no impact on that indicators. They hold flat, and that could be the really some of the significant moments in the assessment of the overall impact and advantage of the quantitative easing for national economy. Another significant moment here is that currently this extreme liquidity mostly put in the risky assets as the equities, and another worrying moment on the United States economy is that the real estate and housing prices starts to appreciate greater than the pace of the economy. That could lead to another problems in the real estate market that currently really is a worrying moment for economists, and they do not exclude another subprime crisis as it was in the 2006, but now it stands with FHA company, since United States taxpayers have paid approximately $200 billion for the saving of the Fannie Mae and Freddie Mac. Now it could need more, around $100 billion to save FHA, Federal Home Association. So that could be the really significant impact on the economy. That's another thoughts that now stand in the minds of the investors, who see that this extreme liquidity puts not in the development of the economy, not in the credit market, not to stimulate the consumption and retail sales, but this liquidity accumulates in the risky assets and puts in different other assets, not in the real economy. That leads to appearing of the bubbles on the economy, on the markets. That's can't treat it as the positive sign in the United States economy. That's another moment that probably, and I think that surely the Fed knows, and that's why this adds some intrigue moments, some thin and nuances to possible assessment and speeches that Fed could give on the continuation of the quantitative program. That will really the intriguing FOMC meeting in the June, and that really could lead to some significant impact on the economy and the forex market. And that's why currently the investor stands in some sort of the indecision and expecting of this potential this particular meeting in the June. So now let's speak about the technical picture of the euro currency. So on the daily time frame, in fact, I do not see much. Market still calling around the resistance that we have talked about. That's major 618 resistance on the weekly time frame, very close to the overbought. That is weekly pivot resistance one, and take a look. That is also 127 extension of that swing. So if you will take this swing and calculate the extension, we will get this 127. It's right here. So in fact, as I said, that is the crucial point for the further development. If market will pass through it and accelerate further, we can't exclude move to the 137 or even higher. If market will fail here, then this could be the turning point based on the weekly head and shoulders pattern and could lead to the downward action. But another moment that I see here, take a look at this thrust. I don't have the 3x3 here, so if we add this, well, what we have? Excellent thrust for any Jordan directional. So here we could get, for instance, the bread and butter buy. That is also possible. Or market could form the double repo sale or something of that sort. Just keep in mind this possibility, since this is not bad thrust on the daily time frame. That could lead to the appearing of the Jordan directional pattern, although we do not have it yet here. So on the daily time frame, it's in fact nothing to talk about. It's just watching what will happen around this area. On the lower time frames, on the 4-hour time frame, what we see? We see this starting sign of the exhausting of the market, some contraction. So you can see this that price action has turned to some sort of the wedge pattern. Now is forming. Okay. So if even we will draw this something of that sort by this top, this also will be some kind of the wedge pattern. Trend has shifted bearish. Maybe market is ready to showing some retracement to the downside. I can't call it as the breakout or some reversal based on the daily time frame, since this could be only just a retracement of that leg. That also will be significant. Recall that we have discussed potential retracement for the 3-8 support area from this move up, and that will be not small move, since this will be about the 2 points on the euro currency. So if the market will show the 3-8 retracement, that probably will reach the weekly pivot point area and these previous tops. That will be the natural support. So I can't exclude that could happen 3-8 retracement initially. Well, whether it will turn to the reversal and downward continuation or not, that is the second step, and we will not talk about it currently. But if retracement will start, then probably the level that I would like to see, and I will watching for is the target of this potential retracement. That will be around 130-150 area. It's right here. What we have on the hourly time frame? On the hourly time frame shows the one significant, really significant moment. Trend has shifted to the bearish side, but that is not the point. The major moment here is that, take a look what has happened here. This was lower high than this one. So market wasn't able to continue high highs pattern. You see? It confirms here high highs and high lows, but here we haven't got the high high. So if you contract it a bit to show the overall price action as the parallel channel to the upside, market has formed here, except this moment here. But no, this is also higher than this one. But here we have lower high. That could be the first bell that probably the retracement could start. The one problem with this is that we do not have any patterns just yet. Some greater patterns. Yes, we have here, yesterday has been formed this nice bearish engulfing pattern. Okay, with this splashing up candle. But in general here I do not see any patterns just yet. No double tops, no butterflies, no head and shoulders. Maybe only just the this wedge on the 4-hour time frame. So that's why I need to see the creating of lower low to see that this tendency has been broken by the market. Maybe this will be some sort of the double top pattern around this area, something of that sort. But we need the confirmation that this particular tendency of the high highs and high lows have been broken before start to think about short entry. That is the first moment that could be the clue for the further downward action, since market, as I said, hasn't formed a higher high. Well, but that is not sufficient moment. Here we can see market trying to pass through this support area again. Well, I need to see the breakout of these lows first. This will be very close to the potential target, but we need the confirmation to take the position. That will be a bit unsafe. We will try to short position right here, because market just could continue move higher. If market will pass through this low, then probably we could try to take short position on the retracement with the target around 130, 150 area. It's right here. Well, that's significant room to take the position, I suppose. Besides, here, if market will reach this level, that could be the nice area to take the long position based on the daily bread and butter buy. That we will talk about it on the next week if market will show this retracement down. So the double opposite positions, first to the downside, then to the upside, will carry a lot of potential profit. So it's not small move in general. This development will be worthy of our attention, and let's be focused on it. So I just would like to show you the moment that could be really significant here, and watch for the patterns. Maybe we'll get some pattern. Maybe this will be the double top pattern here if market will pass through this low. After that, if it will happen, then we could take the short position after retracement, some small retracement on the hourly time frame, something of that sort. So at least currently I do not see anything more. Maybe market will show us what we would like to see. So keep an eye on this. Hope that we will get some possibilities for trading in the nearest future. Also, guys, do not forget to place your vote on our sentiment index. I already have created the thread for the with the poll, and share with your performance with the current week. We will highly appreciate your attention and your participation in creating of this sentiment index.